Hi, Peter Jones, author, property investor and ex-chartered surveyor. And I was with one of my pay-for-a-day consultation clients yesterday, and they were asking me what I thought is going to happen in the property market and what I think is going to happen in the economy over the next few years. So I thought, yeah, let's have a chat about that. Because we're living in very strange times. Obviously, the whole financial world has really been tipped on its head. And when you actually look at what's happening behind the scenes, then we've never ever lived through a time like this. But anyway, let's start at the beginning by thinking about the property market. And as I talk, the property market is actually going through a mini boom, which has surprised a lot of people, myself included. And there's a lot of speculation as to why that might be. There's the stamp duty holiday, which the Chancellor announced, which runs until March. There's the fact that people got fed up in lockdown, and so allegedly, anecdotally, people are moving out of the cities into the suburbs where they can have a garden and not be stuck in a flat. And all of this kind of stuff potentially is pushing the market along at the moment. But the thing which is really interesting about it is, if you think about it, the fundamentals for a property boom really aren't there. We're coming out of lockdown. A lot of people are still pretty nervous and not engaging in business. We've got a lot of people who are probably going to be made redundant, and they don't know they're going to be made redundant yet, but they may have an inkling that they're going to be made redundant. And people, generally speaking, aren't spending money. In fact, the savings rate has gone up, which shows that people aren't spending money because people are cautious and worried about the future. So it's really not the time for a property boom, but there it is. Even today, the BBC website were quoting Nationwide, who say that prices in the UK are the highest they've ever been. So very interesting times. One thing which is potentially helping, though, is the fact that interest rates are so low. But having said that, the counter to that argument is that banks being banks, they may have cheap products, but they don't really want to lend them. And so actually getting a product at a cheap rate is probably quite tricky. So it's quite strange. The one thing I do think is this, that it's a bit of a false dawn. I don't think that this boom is going to continue. I think that once furlough finishes, which is going to be over the next couple of months, once people do realise that they've made redundant, sadly, and they're unemployed, I think that the property market is going to take a dive. There's going to be businesses which at the moment, they may be stumbling along, or their owners may have dreams of reopening at some point in the future, and that's not going to happen. And we're going to find that the economy has taken a big hit. We know it's taken a big hit. The big debate is over how quickly it bounces back, and the reality is it's probably not going to bounce back as quickly as the politicians and the central bank would actually like. So the property market, as far as I'm concerned, in 3 months' time, 6 months' time, is going to be looking very, very different. Are prices going to fall? Well, I imagine that they are. How much by? Well, that really depends on what the banks do, because it's one of these ironic things that the banks are probably going to want to step back because they're going to be thinking a little bit cautiously about what may happen in the future. But the irony is that if they step back and stop lending, they're probably going to create the problems which they're nervous of. So I would imagine that behind the scenes, Rishi Sunak, via his mandarins and his top officials in the Treasury, will be trying to encourage the banks to keep lending. Otherwise, the recession, which is going to be bad, really bad, is going to be extremely bad, because the one thing which is really going to kill the property market and probably business and commerce is if the banks stop lending. We need bank lending. We're completely addicted to borrowed money in this country now, worldwide in fact, and actually more on that in a moment. So the property market, it's doing well at the moment, but I'm very suspicious of it, and I think in 3 months, 6 months time it could look very different, and then we could be in for like a 2 or 3 year drop in the property market. How far will prices fall? Well, you can see all sorts of predictions ranging from 5% to 20%. Point is, though, probably it's not going to be consistent across the country. Common sense would suggest that it's probably going to fall more in higher value areas. So London and South East, you could see bigger falls than lower value areas like the North. Of course, I haven't got a perfect crystal ball. And in fact, the argument against that is that's not really what we saw in 2007, 2008. When in 2007, 2008, we saw significant falls in the lower value areas as well as the higher value areas. So who knows? If you found this video useful, please like, follow and subscribe, and then we can keep in touch and I can send you even more great content. And if you come over to my website, www.thepropertyteacher.co.uk, and click on Learning with Peter, You'll find loads of great resources, including my best-selling home study course, The Successful Property Investor's Strategy Workshop, in which I'll take you through how I started my property business with literally none of my own money and bought £2 million worth of property in just 4 years and replaced my day job with passive income from the portfolio. It took me 4 years of trial and error to learn the best way to do this, but because I'm going to show you everything I did right so that you can copy it, and everything I did wrong so that you can avoid it, I'm sure you can achieve far more than me and far more quickly. So please visit my website for full details of this and all of my other resources. And until next time, here's to successful property investing.